Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
All right, welcome, everybody. Welcome. My name is Nathan Williams, the developer of the AIRO software. This call is the, as I call it, AIRO Insights call, the AIRO 101 call to help you guys get set up with AIRO, kind of go through the dashboard, as well as show you how to use strategy number one. What I've been noticing that is that most people are already good to go. So what I'm going to do is let's take a poll. If you have not been set up yet, all right, if you have not been set up on the with AIRO, drop in the chat that you have not been set up, so I can see how people need to be set up. Because sometimes everyone is set up and there's no need to even go through the setup process, and we can go on looking at other strategies and they can help you guys advance. All right, let's do this one. If you're all set up and you're good to go, drop bag in the chat. BAG, drop bag in the chat if you're all set up and ready to roll. Cool. Looks like everybody's set up on this call. Looks like everybody's set up on the call. Appreciate you in the Q&A, Raj. Cool. All right, cool. Well, I'm not going to waste you guys' time going through the setup then. If everybody here is set up, if you're not set up, please let me know you're not set up because I will go through the setup process for as long as there's one person that needs to be set up. Well, we'll help anybody out that needs help setting up. That's what this call is for. If not, then everyone else will just jump on and look at some other strategies and whatnot. So it looks like everybody is set up. All right, cool. So let's do this. All right, drop in the Q&A or into the chat. What do you have questions on? So we got an hour, guys. We got 52 minutes. Everybody's set up. So, hey, let's give you guys extra value. And instead of showing you the setup process, we're going to talk about other strategies and things of that nature. What do you guys want to go over? What do you guys want to go over? Don't speak all at once. Anybody got any questions? Want to go over how do we decide lot size? So with lot size, again, it's really up to you when it comes to risk management. I recommend, and I'll explain why I recommend this. I recommend that you use a 0.01 lot size for every $100. So if you have $1,000, 0.01 times 10 is 0.1. Here's why. If you have $1,000 and you're using a $1 lot size, you have to lose 1,000 pips in a row before you blow your whole account. All right. So it means that you get a lot of opportunities to lose, which means it gives you a lot of opportunities to make some mistakes. Yet once you get your groove, you turn around without risking too much of your account. So that's what I recommend: 0.01 for every $100 in your account. All right. When's the best time to trade if you do it daily? Inside the money zone. That's why I put it there. The best time is the money zone. So from 12 a.m. Central to 12 p.m. Central, anytime during that time frame, those 12 hours. Over 80% of all volume is traded during that time frame. The Asia breakout, MAAW, WVVM, so strategy number 9 and strategy 7. All right, cool. So let's go to the charts real quick and we'll go over this. Asia breakout. All right, so we'll go over Asia breakout first. So number one rule on Asia breakout, it is only for the GBP pairs. GBP JPY, GBP USD, GBP CAD, GBP NZD, GBP Chef, GBP AUD. That's it. Now, if you guys can prove long-term that it works on any other pairs, great, let me know. But this strategy is for GBP pairs only. All right. Now, let's see here. Let me see. How are we going to set it? Let me find an example. Let's find an example here. Cool. We got one right here. All right. All right, so rule number one, there's 3 steps to the rule. There's the identify the trend, the setup, the entry. All right, so identifying the trend. As you guys already know, zoom all the way out, count your zones. 4 red, 1 green. So we know the trend is what? Trend is down. So we're only looking for sales. Rule number 2, the setup. So we're going to look at this past lending session here. So the setup is, it's called the Asia breakout. So what you want to do is you want to ensure that on your chart, you have the period separators here. These tell you the start of a new Forex day. So to get these period separators on your chart, right click on the black of the screen, right click on the black of the screen, come down to properties. And then right here in the top left-hand corner, go to common and select show period separators. You know, make sure that's turned on. All right. You have these lines here. This signifies a new Forex day is starting. All right. And so what you want to do is you want to mark that Forex day with the vertical line. All right. Boom. All right. Because imagine we're trading this day right here. So we mark this day here. Next, we take the same vertical line and we mark at the beginning of what? Of the money zone. So mark the beginning, boom, like that, of the money zone. All right. This right here is the Asia channel. This is Asia session blocked out right here. Now, to make the full channel, what you want to do is you now want to mark the top and the low of the channel or of the session at the body. So right here is the top. And then the low is going to be right here on the line. So it does count. On the line counts. All right. On the line counts. So that's going to be the lowest for the day, for this session. So that's the lowest point for the session. That's the highest point for the session. All right. Next, you want to identify and just check the distance between top and the bottom. So how big is the Asia channel? So you want to use the crosshairs to measure. You can see that it's 23.3 pips. So we're good. If this was more than, if 50 pips or more wide, do not enter the trade. Why? Well, like we talk about all the time. Where is it? Oh, wow. Let me add that back. Don't know where my dashboard went. That's strange. I'll add it later. But on a dashboard, it shows you ADR, right? Shows you ADR. Man, that's strange. Hold on. AIRO dashboard. There we go. Nope, that's the old one. So on the AIRO dashboard, you guys know, you guys are all set up. It has the ADR. If the ADR, typically for GBP pairs, which one were we on? Oh, here we go. Typically on GBP pairs, the ADR is typically somewhere between 80 and 120. So at 50 pip, if the session is already 50 pips coming into the money zone, that means you've used up over 50% of the ADR for the most part, which means that your probability of catching your 20 pips is what? Is lessened. You know, you got a lower risk. All right. So guess what? It's 23 pips. All right. So what you're waiting on now is the first candle inside the money zone to break the low of Asia session. Why the low? If it broke the high, don't worry about it. The trend is down. The overall trend is down. So we want to trade with the trend. This candle broke the low. So our entry is right here. This candle broke the low, so we enter into this candle right here. Let me change the color. So to identify that this is our entry here, we turn to yellow. All right. This candle is the first one to break below the low of the Asia channel. So we enter in next candle. You can see here, this candle dropped that 13 pips, reversed 14, and then dropped 18, 19 pips. For me, once I see 15 pips in profit, I put my take profit I put my stop loss to take profit. So I would have got stopped out in profit. It went back to 22 pips, and then it dropped by the end of the day, 58 pips. So you got the 20 pips if you held. If you didn't move your stop loss, some people don't. For me, once I see 15 pips in profit, I lock in my profit. That's just me. That's just the way that I trade. That's it. Same rules apply when the trend is up. You just wait for the price to break up. All right. If there's a zone here, don't take the trade. All right. Don't take a trade into a zone. All right. Now, if there is a zone, let's say the zone is, let's say the zone is right here. All right. So the zone, let's say this is the zone right here. Yeah, let's just say there's a zone right here. All right. So say there's a zone right here. All right. So there's a zone right here. What I do is I wait until price breaks the zone. And so now my Asia session, I move it down here, the bottom of that zone. And then I do what? Then I measure it. 48 pips. I'm good. I'm good. So guess what? This candle closed below the zone plus the original Asia channel. But guess what? It's less than 50 pips. I enter in the trade right here. On the start of this candle right here, you can see what? Price went backwards 13 pips. Dropped 17 there, went back, you were down 7, and then it dropped by the end of the day. You hit 20 pips. All right. So you can add the zone in there so that if you guys ever get on my calls, you see me with these horizontal lines on there. That's when I'm marking the tops and the bottoms of the chart of the zones. And if it's there, I feel comfortable that if we break it, we can see the upside. That's how I trade it. That's how I trade it. So that's the Asian breakout. All right. Strategy 7 is multiple strategies. M's, W's, and wedges. All right, so that's strategy 7 that you asked about. So let me go find an example of M, of a W, and a wedge. All right, you see we're in a downtrend right here, big time on GBP NZD. We're in a downtrend. Let me go to the 15 minute. I'm sorry, let me go to the 15 minute. Here we go. On the 15 minute, we're still in a downtrend, right? All right, still in a downtrend. Let's go back here. We're in a downtrend. So I'm gonna go back here. So in a downtrend, you take your M's. In uptrends, you take W's. All right, downtrend M's, uptrend W's. So as you can see here, as you can see here, let me see if I can draw real quick. As you can see here, we have what? We have an M that goes what? Into the zone. So it's anchored at the zone. All right. So two things you look for. All right. You look for two things. Number one, you look for the M hitting the zone. You want both points to touch the zone. So both points of the M. So this peak. And then you want what? You want the peaks to be lower. So you want it to be slanted down. Because again, what? If it's slanted down, it's indicating that the overall trend is down. So now that we know the overall trend is down, we got more red zones than green zones, and we have an M that's hitting the zone and it's slanted down, then guess what? What you're waiting for is the first candle to close below the neckline of the M right here. That's the neckline. So we put this right here like this, boom, and boom. That's the neckline of the M. All right. This candle closed below it. We enter our trade. Next candle right here. You see it went backwards 8 pips and it dropped down to our 200 easy. But it dropped down before it had a big reversal. It dropped down 123 pips. This is outside the money zone. Strategy 7 can be used outside the money zone. So that's M's. M's are only used in downtrends. Let me find an uptrend for the W. Let me find the euro because the euro's been on an uptrend here. Let's find the euro pair. Nope, downtrend. Gold. What's gold doing? Gold moving. Gold moving. Here's 500 cash. So GBP, JPY has been in an uptrend. All right, cool. Here we go. 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 We're in an uptrend. You guys saw that. You guys know more green zones and red zones. So we're in an uptrend. All right. Now we're waiting for that W formation. Same rules apply as the M. The only thing is just a difference. It's backwards. Now we do what? Now we find that W formation. It's inside the money zone. That's fine. Typically, if it's inside the money zone, you're typically going to take profit a lot faster because there's more volatility. All right, more volatility. But look at that. W off the zone. It's still planted in the zone because you got the wicks coming down here touching the zone. But you can see here, it's slanted up. It's slanted up. All right. Here's the neckline right here. The neckline is always at the W, at the body. At the body. So you can see here, what? You can see here, this candle closed above it. Got in, 23 pips, done. Literally in in less than 45 minutes, you get 20 pips, you're done. That's it. You're done. You are done. As you get more advanced, you see, look, it's another W bouncing off the 200 moving average. Slanted up. You could have got back in that trade for some more. But that's for the advanced traders. When you trade, these moving averages are just like support and resistance levels. But that's it. That's how you took that trade there. Got in this candle. You literally had 4-pip drawdown and it ran up 23 pips. Easy money. Easy money. So that's the M's and W's. Now let's talk about wedges. There are 2 types of wedges. Ascending wedge, descending wedge. All right. Ascending wedge, descending wedge. So let me find. All right, you can see we're in a downtrend here, right? We're in a downtrend here. All right. We're in a downtrend. You can see price came down, went back up to retest the zone, and then it dropped. So here's a wedge. You can see here, a wedge is where price touches multiple times. And you see here, multiple touches right here. That's the base of the wedge. And this is going to be an ascending wedge. All right. You see it's ascending wedge. Boom. It's a wedge. All right. And so guess what? You got price breaks through it here. That's too close for comfort for me. So I wait for a little more strength in the push. You got to break through here. You get in the next candle, which is right here. Literally have half a pip drawdown. That candle alone dropped 37, call it 38 pips. You're done. You're done. You're out. You're out. You're looking for price to break below the resistance or the support zone because it's coming through, come back up, touch this area, turn it back into a resistance zone, and then come back down. And so that's your wedge. So you draw it up. So we're going to go find an uptrend, and I'll draw it in an uptrend. It's a downtrend. Here is an uptrend. All right, here we go. Here we go. Here we go. Here we go. 2 of them back to back. 2 of them back to back. So you can see, boom, price is just touching this support level multiple times, right? Just line that up. All right, cool. You see where you're getting all your touches at right there. Boom, 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 boom. But you see that it's doing what? It's turning into a wedge. It's trending down. Look at that. Getting tighter and tighter and tighter and tighter. And when you draw your trend lines for your wedge, you want to draw it at the wicks. You draw the base at the body, right at the wicks. All right, so let me zoom in. You see the wedge. It's a thin wedge, but it's a wedge. All right, and then guess what? You got to break above. Boom, you got to break above. You got two of them. I like a little more, but you got two in a row. So I'd have got in probably after that second one because they're kind of small for me. That one right there, 3 pips, ran up 8. But you can see this one runs up all the way up 60 pips. Broke that wedge. Then guess what? Came back and did it all over again. Came back and it did it all over again. Look at that. There's the base. And guess what? It's a whole nother wedge. Whole nother wedge. All right. Going into the next day. And for me, I'm waiting for it not only to break out of the wedge, but I need to break out of the zone as well. So guess what? It broke out of the zone right here. So I'm in on this candle. 8.6 called 9-pip drawdown. At 16 pips right there. It comes back down. It eventually runs up 35 pips. That's it. That's all you do. All right. That's a descending wedge for an uptrend because we're in an overall uptrend, and then the overall ascending wedge is in a downtrend. That's strategy 7: M's, W's, and wedges. Can I let people in, please? The Zoom link is set up to where you should already have it. So once you select it, you're good. There is no, I don't let people in. So all right. So next is people asked about strategy 9, MAW, WVVM. I can tell you this is only for Forex pairs, not indices. We are not looking at MAAW, WVVM on gold. We're not looking on indices. It's only for Forex pairs. All right. Only Forex pairs. So we'll go back and share the screen. All right. And while we're here, we can go ahead and look at it and see if we can find one here. Just clear that up. All right, so WVVM, MAW is all terminology coming from market makers. So a market maker, for those who don't know, if you haven't watched strategy video number 9, is an individual that makes the market. So they are the ones that create the bid and ask. As you guys know here, I want to click trading. The bid sell, we sell at the bid, we buy at the ask. Typically, there's a red line, a white line. Let me see if we got one here. All right, you see, let me clear this up here. Boom. You see here on price, you got a red line and a white line. The red line is the ask. So if I hit buy, it's gonna buy at that where that line's at. If I hit sell, it's gonna put a sell entry where that white line is at. The difference between the two, the gap, the distance between that is what's called the spread. All right. So the market makers are the one who create the bid and ask. So if they move the bid and ask higher, then naturally what? Price goes higher. If they move the bid lower, price goes lower. They're moving the bid and ask to money and then away from money. So for example, let's say that, because the one thing that market makers see, they see every order. So every broker that uses a certain liquidity provider, the market makers manage the liquidity provider. So they look at that. They're managing the overall market. There's multiple liquidity providers. So there's multiple market makers. And so all the brokers that use a specific liquidity provider, the market makers can see where all the orders are at. They know where all your take profit levels are at. They know where all your stop levels are at. All right. Let's say, for example, I'm going to put this zone right here. As you can see here, we're in an uptrend, right? We're in an uptrend. So we're in an uptrend. And they got up here after the uptrend, dropped the price. Went sideways for a while, ran it back up. Then dropped the price. All right. So they dropped the price here. And this is where AIRO saves you because the zone is here. So if the zone wasn't there, you'd have saw this and been trying to catch the breakout. Like, oh, it's selling, it's selling, it's selling, it's sell, 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 sell. Look at all these wicks. That is the market maker going down there and getting all these orders over and over again, going down there and getting all these orders. They keep seeing people come in here and put all these orders in. Once they get enough orders, once they field enough money, they've got enough money locked up because they got everybody's orders activated. They then do what? They then collect all the orders. And look at this candle right here. This candle said, I'm not going to go back down there. I've got enough. We got enough money. And it moved and shifted the whole zone 50 pips, just about 47 pips away. Literally in a matter of 1, 2, and 3 candles, it ran up 43 pips. If you're down 43 pips, you're going to be holding on for dear life. Or you've blown your account because you're over leveraged, or you freaked out and closed the trade, or you hit your stop loss. And you're like, whatever. Because you didn't know the trend. You thought it was a breakout of the sale. And that's what the market makers do all the time. So anytime you get into a trade and you sit there and just kind of in profit, out of profit, in profit, out of profit, and then all of a sudden, 2 candles later, you're in a negative big time. Typically, it's a market maker move. They've collected enough money from all these pending orders, or people placing new orders. They're like, okay, let's collect. That's why you see these wicks. You see the wicks to the bottom. Collect. Run it back up. Oh, more money came in. A lot of more money come in. Okay, let's go back down there and get it. Collect. Okay, we got enough. We out. That's what market makers do. That's where you get your M's and your W's. They come down, they collect. They start to head back up. Somebody puts a whole bunch more money back in, or a bunch of retail traders do. They say, oh, more money. Go back down here, collect. We're out. Look at that W formation right there. And we already know because of AIRO that we're in an uptrend. We have more green zones and red zones. So we know not to fall for that fake out into the zone. We're not buying. We're not selling. We know that. All right. Now we understand that concept. Let's go back and look at it. So there's typical patterns market makers make in an uptrend and when they're in their downtrend cycle. Because again, the market makers, they move the market. Now, everyone thinks the banks and hedge funds with their unlimited resources move the market. They don't. What they do is they entice the market makers to do so. So for example, the bank knows what the market maker cycle is. They know the game. And they say, hey, let me go ahead and I want to put on a $200 million trade, but there's not enough money in the market. So what the banks do is they'll put, let's say this blue line down here, this blue zone, they'll put a $10 million trade on down there, pending order for a sale. And the market maker said, oh, somebody put $10 million of sale on down there, even though the cycle is up. Let me go down here and get this move. They come down here, they get the money for $10 million. They activate that trade for a $10 million sale. But then guess what? The bank came right back and said, great. Now that there's $10 million worth of sale activated and the price moved down there, then guess what? That means retail traders put more money on there. So the bank enticed so many people to bring more money into the market because the market makers move the market down to where the bank put their pending order at. Because again, the market makers, they see money. They're seeing money. They come down and get that, activate that order as a sale, and they go the opposite direction because they make money by making you lose money. But the banks have unlimited funds. So the bank says, activate my 10 million. I don't care. I'm going to put on a $150 million trade right in this area, take it back up, catch me 10, 20, 30, 40, 50 pips, whatever the case may be. And then guess what? We already know that the market's got to do what? It's got to come right back down to where that trade was activated. Look at that. Come back to where that area was activated, and we're going to get out at break even. So they stayed in the negative on this $10 million trade right here, however millions, activated the bigger trade right here, made that upside on the reversal, and then they knew that, oh, well, we put a small trade on here, just 10 million. Our $150 million trade was right here to get us our 190 million or 200 million profit, whatever they want to make. And then we know that the market's got to go right back to where it started. And boom, we get back down here, same area, close the trade out, break even or slight profit. So they win. They can do that because they have unlimited funds. They have all your money and my money in the bank account. So now as you understand that, let's go look at the market maker cycle. Because the market makers have a cycle. Can be tough to see sometimes, but they have a cycle. All right. So when you're in an uptrend, the cycle is WVVM. WVVM. It's typically a cycle that happens over a 3-day cycle. We'll typically see a 3-day push. All right, you'll typically see a 3-day push. All right, here we go. I don't know why it's on a different screen. So typically you see a 3-day push. All right. I'm just gonna lay it out for you. The push is gonna be 3 to 5 days. Typically 3, but 3 to 5 days. W, V, V. Let me zoom in just a little bit. There's your W. All right. V, your V. And then it's kind of funky looking. But then they end it. And again, they never make, the patterns are there, but they're never going to look the exact, they're not going to look perfect. They're never going to look perfect. Sometimes they do look perfect. There's your M. And then guess what? The market drops. See the cycle? W, V, V. Day 1, 2, 3, boom. 4th day, drop. So that's the uptrend cycle. All right. Now, sometimes they go WVVM, quick drop, and then right back into a WVVM again. For the overall trend up might be up, but there's always going to be a correction. Then sometimes they go WVVM right into the whole brand new cycle, and they flip everything. All right. So let's go look at another cycle. We'll look at it from a downtrend standpoint. The downtrend cycle is MAAW. MAAW. Let me try to find a clear one for you guys so you guys can easily see it. All right. This was a short one, but you can see it here. Let me zoom in a little bit. I'll draw it for you here. M A into a what? W. And you see now it's starting to reverse on the 3rd day. 1, 2, 3rd day, reverse. MAAW. So once you can start to identify and see that, you'll be able to start to understand the overall strategy, which is strategy number 9. So strategy number 9 let's see here. All right, cool. Yeah, here we go. Strategy 9 is once you identify the cycle, so you see the WVVM, right? All right, what we're waiting for is after the W, you're waiting for the arrow moving average, which is the blue one, to cross above the 200. So for strategy number 9, you want to add the 200 moving average. That's what this magenta line is. This purple line right here is. You get the arrow moving average that comes standard with arrow. And then you got the magenta one. When You identify, okay, we're in uptrend. Here's the W, boom. There's the arrow moving average crossing above the 200. Now what we're waiting for is what? We're waiting for price after the cross. We're waiting for price to come down and do what? Touch the 200 and close back above it. Touch the 200, close back above the 200 and the arrow moving average. It did both here. You get in this trade here. Again, you don't need to get into, you can get into it outside the money zone. There are two take profits, 25 pip take profit, 50 pip take profit. All right. You can see that you never went lower than 4 pips and it ran up 63. Never went more than 4 pips in the negative and it ran up 63 pips. Again, it did it again right here. Came down, went below the moving average, both arrow moving it, touched the 200, closed back above both. You get in the next candle, boom, boom, boom. It dropped 2 pips below, ran up 63 pips. For the buy, it doesn't have the one I showed you guys, didn't have the touch. You see here, arrow crossed below the 200. Price never came back up and touched the 200. It just went straight down. So on a sale, you're waiting for price to come back, touch the 200, and then come back and close below the arrow moving average and the 200. And you get it for the sale. 25 pip take profit number 1, 50 pip take profit number 2. Now, how do you know when to take 25 pips or 50 pips? The closer it is to the beginning of the cycle, the bigger move you can catch. So as you see here, the first time it happened was right after the W, before the first V, right after the W, hours after the first W. 50 pips. If you catch it before the second letter, so WVVM, if you catch the entry before the V, 50 pips. Anything after, inside the V or with or after the V, the first letter, the second letter, I'm sorry, 25 pips. Same thing with the sale. I mean, with the sale over here. Where we at? Had this came up here and touched it, you see here, this is we already had the M, the A, this is the second A. By the time it crossed over, you've already had the M and the A. By the time the arrow moving average crossed over the 200, at that point, if price comes back up here and touch it and drop, you're looking for 25 pips, not 50. The closer it is to the beginning of the cycle, so the closer it is to M, if it's in between M and the A, or in between W and the V, 50 pips. Anything inside that second letter or after, 25 pips. All right. Stop loss is going to always be 25 pips. So you have a 25 pip stop loss. So it's going to be a 1-to-1 ratio, 25 pip take profit, 25 pip stop loss, or it's going to be a 1-to-2 ratio, 25 pip take profit. Stop loss, 50 pip take profit. All right. So in this scenario right here, on this entry right here and this entry right here, I would have had a 25 pip stop loss. My stop loss is off the screen, but it's 25 pips. That's less than the 40 pips with bag entry and the other strategies. So now the ratio, for those who want a better risk to reward ratio, this is a strategy that gives you a better risk to reward ratio. All right. That's how strategy 9 works. It's a little lengthy because I kind of got to explain about market makers and so you guys understand how all that works and what they do and why this makes sense. But that's just, the strategy is very simple to actually put into place, but you have to identify it. You can't just take the trade just because the arrow moving average crossed over. It's got to be uptrend. You got to see the cycle starting. Like, all right, cool. There's a W. I got a W. Boom. Arrow crossed over to 200. Great. Came back, touched it. I'm in. 50 pips. If you can't identify the cycle, don't take the trade. Just because the arrow moving averages crosses over to 200 doesn't mean you enter the trade. Oh, strategy number 9. No. People call out strategy number 9 to me all the time, and I can't identify the MAAW or the WVVM. If you can't identify it, don't take it. Don't take it. These moving averages cross all the time. You have to take it in the direction of the trend and with the market maker cycle if you can visually see it. If you can't, do not take the trade. Do not tell me on the call, Nate, strategy number 9, trash. If I can't see it and you can't see it, no, it's not a setup. You have to be able to see it all. That's why this is a strategy number 9. It's an advanced strategy. Strategies 1 through 4 are for beginner traders. 5 through 7, intermediate. 8 through 10 are for advanced traders. Strategy number 9 is an advanced trade. If you cannot identify it, don't call out strategy number 9. All right? That's how that works. Let me jump off here. Let's see here. Let's see here. Again, MAAW, WVVM, Forex pairs only. All right, only. Yep, that's what we did. We went all the way in on strategy number 9. All time frames. So strategy number 9, you want to use on the 15-minute and the hour. On the hour, you might catch 50 to 100 pips. The setups on the hour, you should, if you find a setup on the hour, you should be taking a 50 pip trade every time. Strategy 10, and we could. We'll look at that in a little minute. I'll make sure we get some of these beginners on here, man. He was on the wrong link. Okay, cool. 3194. Isaac, I don't know what that means. 3194. What does that mean? Steven, yes, we can help you set up your account. We asked everybody at the beginning of the call if people needed help getting set up. Everyone said they were set up, so we're just going over strategies. I want to make sure everybody gets value out of the call. So Steven, where are you at? Steven Herring, where are you at, and what do you need help getting set up? We will stop everything and get you set up, because that's what this call is for. You're from Akron, Ohio, man. Hey, I'm not gonna hold it against you, man, because I'm not a LeBron fan. I know that's where he's from, so you're probably a LeBron fan, man. I'm not gonna hold it against you though. But now, where are you stuck at, man? From a standpoint of where do you need help getting set up at? Now, after we get you set up, then we'll get back to everybody else's questions. This is the setup call, so bear with us, guys. Steven needs help getting set up from the beginning. All right, cool. From the beginning. All right, so from the beginning, we'll do it this way. And again, if I go too fast, this call is always recorded. You can go to Auvoria Prime's YouTube channel. So go to YouTube, type in Auvoria Prime, and you'll find all my Sunday calls where I talk about setups. So if we go too fast, you can always go to refer there. Also, this call right here is being recorded, and typically it'll be on Auvoria Prime's YouTube channel within 24 hours. So around this time tomorrow, it'll be out, if not sooner. That way you can always go back and refer to this call. All right, so first things first, we'll go to the website so that you understand where to find the software if you haven't selected the software, where to find the VNC and the RDP. All right, we'll talk about all that, what that means, and then all my strategy videos and how to get set up. All right, so that you understand. So we're going to go to the website, so AuvoriaPrime.com. All right, so we're here. All right, so first thing first, congrats that you selected AIRO product. Welcome. You want to come over here, click on these 3 dashes. You put this menu option here. You go to AP Marketplace and select Switch Tools. It'll bring you to this tab right here. Under Switch Tools, if you have not selected software, you'll see like 6 different blank boxes like this. There'll be a blank box, but it'll be a square like this. And instead of saying launch VPS, it'll say select software. And so you just want to select the software. So you scroll down. I'm sorry, you select select software, and then you go in there and it takes you to the new page, and there's a list of all the softwares. Go to the very bottom. On the very bottom is AIRO. Select AIRO. It'll bring you back to this page right here. It shows you that you have bronze level or whatever level you have. It'll show you. For me, I've got bronze in this account. This account only has one software. So it tells me what level I have. It tells me what software I have. And it tells me I'm active. I select if I want to switch. Again, the cool thing about Auvoria Prime is it allows you to switch between the different softwares once a week. All right. But again, switching every week is doable. Some people do it, but it takes time. I would say at least test the product out for a full month before you decide to switch. You just want to see how, no matter what software, at least use it for a month to see if you like it. Don't just switch every week just because you can. But you have the opportunity to switch every Saturday. Right? Every Saturday you can switch. Now, when you want to launch a VPS, you can come here and select Launch VPS. If you're doing this for the first time, it's going to ask you some information about what broker you use and some other information. You want to select all the information that applies because it has to create your VPS, your virtual private server. The cool thing about Auvoria Prime is you get a virtual private server. Everyone pays $119 a month if you have the bronze, maybe you have the bronze, and you get one software. That software gives you two things. You get a virtual private server and you get the software. The cool thing about a VPS is a few things. Number one, it's there to protect you and me. So it protects you because the VPS, you have a lot of protocol to go through to ensure that only your eyes can connect to it. There's a lot of passwords, stuff like that. So it protects you from having anybody, giving access to the software to, go and make trades on your account. All right. It also protects me because my software is locked up inside the VPS, which means that, and a VPS is locked down. It's not a real VPS. It's a real VPS, but it's locked down, so you can't use it like a traditional VPS you would buy yourself. But it's locked down to protect software like myself that that create software, so that people can't hack into the VPS and get the software because there's certain things that they can't do. So it protects the software. But another benefit for you, it allows you to access your software anywhere in the world. You can log into your VPS from I'm on my laptop right now, but I also have my VPS here on my phone. So here's my remote desktop that's on my phone. I can select the account and I can log in. I can actually trade with AIRO on my phone. With the MetaTrader 4 software, the app you have, they do not allow custom indicators. So no extra, no EAs or indicators that Auvoria Prime offers can be used on the mobile version. So your tablet and your phone. You can only use it on your desktop, all right, or your laptop. And so that's the benefit about having a remote desktop. You can log in, and the VPS gives you access because the VPS is nothing more than just a virtual computer in the cloud. That's all it is. So that's the cool thing about it. So this is what this is here. So from a VPS standpoint, you log once. It takes about 30 minutes to an hour once you first, fill out all the information for your VPS. All right. So once you first fill it all out, 30 minutes to an hour. Come down here once you set up. Come down here to VPS accounts. Select this. You drop down here. Select your access pass. It automatically gives you your password. Do not share this. I've got multiple accounts. So this account right here is a dummy account. I use it for these calls so that people know that, if they try to log into my account with my password, it's just going to be the only thing they're going to access is a demo account. So it doesn't matter to me. They can log into my demo account, make trades all they want. It doesn't matter to me. All right. But never give anybody this password. Never show anybody this password. All right. Never also show anybody the information on the remote desktop. We'll go over that in a second. Here, once you've logged in, you got connect to your VPS. So if I select this here, it's going to connect to my VPS through the website. Do not use this. You can, do not use it. From the standpoint of you'll have a better user experience by using remote desktop. I have a Mac, so I have to download the Microsoft Remote Desktop application on my laptop so that I can log in. From my computer. I also log in from the Microsoft Remote Desktop on my phone and my tablet, so I can use my VPS on my phone and on my tablet. If you have a non-Windows computer, so a Lenovo or a Mac, then you want to download Microsoft Remote Desktop. That's what the icon looks like. All right, Microsoft Remote Desktop, Microsoft Remote Desktop. That's the icon right there from the App Store or wherever you download it from. All right. If you do go to the website, which you can, some people do. Again, the user experience is not the same. You want to go on Microsoft Remote Desktop, but to log in, you see it says press Control Alt Delete to sign in. You don't push it. You got to come up here and hit Send Control Alt Delete. All right. Again, it's locked down. You can't do certain things in this environment like you could if you bought the remote desktop directly from the company. All right. So once you've done that, it's going to have you type in your password for your trader. Trader is going to be your username. So to type the password in here, you want to come back to this page and you want to come over here. If you already closed it out, view password, it's going to bring it back up again. Copy this password. Come back. and you want to put it in, not here, you want to put it in up here in this white box. Paste it in there, and you see it automatically puts it in down here. Then you hit this button right there. And now, boom, now I'm inside of my Microsoft Remote Desktop. That's what it should look like. All right. Icon number 1 should be your first software. If you got AIRO only, it'll say AIRO. If you got more than one software, you got 4 spots here. You can have a max of 4 softwares. So you got 4 spots here. All right. And then you have these next 2 that you need: reboot, Windows Update. Every weekend, you should be looking to reboot your software, reboot your VPS. You reboot it here, and then you come back and you also reboot here on the website and inside the VPS. And then once you've done both, then you come back inside the VPS and hit the Windows Update. Every weekend, I recommend Friday when the market's closed, or Saturday or Sunday before you get back on the charts, whatever your routine is. Over the weekend is the best time to do it. All right, then you can just double click on AIRO. It's going to pop open the MT4 here. You log into the MT4 like normal. If you never logged into an MT4 for the first time, I can walk you through that. But you see here on the screen, it's small. It's a small screen. You see, why are there gaps on the sides? That's just the way it's set up here. So it's not the same. The pixels, the picture quality is not the same. It lags a little bit more. So it's not as smooth as going through your Microsoft Remote Desktop. That's why it's recommended to go through your Microsoft Remote Desktop and not through the VNC, which is through the website. All right, but that's how you log into the website. All right, so let's let's go back. Let's go back to the website. All right, so we'll go back to the website here, and of course you already know how to find your password here. Remote desktop connection. So whenever you download your Microsoft Remote Desktop application on your computer, you want to come here to get your credentials to log in. Again, do not share this with anybody. I'm sharing mine with you because mine's a dummy account. It only is it's only hooked up to a demo account. So I have it set up that way. I've got other accounts that I have my live account hooked up to, but do not share this with anybody. You have your username, your IP address, your password. Now, here's where you put it in. So let me find my Microsoft Remote Desktop. Here we go. Here is my Microsoft Remote Desktop, the interface when you want to log in. You can see here, I've got 3 accounts. I got my own personal VPS that I've had for years. And then I've got the one you guys are seeing with the demo account is AP35. And then my other AP with my real money is under AP. So I've got 2 accounts with live accounts hooked up to it. And I got one with the demo account. This is the one that I use for the dummy. All right. Now, when I want to add an account for the first time, because usually these aren't showing when you first add yours, you have to add it. So you want to come up here to hit new. Whether it's Microsoft's version of Microsoft Remote Desktop or this version right here, this version right here is the Mac version. It's going to all say the same thing. I had a little plus sign to add new. So you hit new, and let me stop sharing and share mine. And it's going to pop up to look like this. All right. Connection name, just type in something. I typed in AP. PC name, you see it says host name or IP address. Here's where you paste your IP address. Remember, you had a username, which is trader. You had an IP address, which is some random numbers. And then you had a password. So under PC name, connection name, I just call it AP. PC name is your IP address. So paste that in there. Username is going to always be trader. And password is the password they provide you. Once you do that, you close out. All right, I've already done mine, so let me delete this real quick. And once you've done that, it does what? It automatically populates. Let me go back to that screen. Boom, boom, boom. It populates, AP35 or AP, I'm sorry. Probably AP because that's what I typed in. All right. And then you can log in. I'm going to log into AP35 because AP35 goes to my demo account. So I log into AP35. All right. Let me share that screen, AP35. And that's what it looks like. From the inside. Boom, got AIRO. Got 1, 2, 3, 4 slots, AIRO. Double click on it, brings up the software, and then I'll walk you through how to add the software on. But that's what it looks like. So now we're here. You see, it's a full screen. Pictures are clear. All right, that's how you set it up there. All right, now let's set everything up for you. All right, let me make sure it's the right account here. All right, so this is the dummy account. So look, when you're first setting up, you want to check a couple of things. Number one, make sure you have all these icons here. They come default, so don't worry about not having them. This last icon here, the one furthest right, is your templates. Select that and look to see, do you have blackout and do you have AIRO? If you don't see AIRO or you don't see blackout, submit a ticket and let them know I don't have AIRO or blackout or both in templates. All right. Also, you want to come over here to under charts to this icon right here, gold folder, gold star. Select that. Come over here to expert advisors, select the plus sign, make sure you have AIRO dashboard. You don't have to use AIRO dashboard, but some people like to use it. A lot of people don't. So a lot of people do, a lot of people don't. I mean, I don't really know what the ratio is, but it's there for you. I'll explain what it is. We'll set it up, but you'll be able to see why or how you can use them independently. So that's that. So first things first, log into account. Most people kind of forget this step because they've already logged in and been logged in. Once you log in, you're good. You want to come to file. You want to come down here to open an account. All right. You want to come down here and type in your broker. All right. So let's say my broker is Trader's Way. I type in Trader's Way. All right. And I hit scan. It's going to scan it for me. And it's going to bring up all the Trader's Way servers on, so you need to ensure that you already have your email from your broker. Your broker is going to provide you with 4 pieces of information. What server your account is on. So if you got a live one, it's either going to be on Trader's Way Live or Live 2. So they're going to tell you what server your account is on. They're going to tell you your username, which is just your account number. And they're going to give you 2 passwords, trader password and an investor password. The trader password is the one you put in because it allows you to make trades. The investor password is read only. So if you got friends or family that want to log into your account and see your progress and how you're doing, you can give them your username, your account number, and investor password. And that allows them to just look at your account read only. They can't make any changes. They can't input any trades. So never give your trader password away. But if you want people to look, you can give them your investor password to look. Once you've selected the right server, let's say we're going to use Trader's Way Live 2 server, make sure that's highlighted and then hit next. Here, hit existing trade account, type in your account number, which is some random numbers, and your password, which is your trader password. Hit finish. Once you hit finish, down here in the right-hand corner, you'll see green and red bars here, and you see, your connection status, random numbers, and then KB, the kilobytes. They're just telling you how fast your speed is. When you see this, and when you log in for the first time, you'll hear, "You've got mail," if you have your sound on. If not, you'll know you're logged in because you'll see this down here, show a connection. Otherwise, if you don't, you'll see down here it says no connection or invalid account. If you see that it says no connection or invalid account, typically you entered in your password or your username or both incorrectly. All right. Most of the time it's the password. The passwords are very tricky. Capital letters, lowercase, L's look like I's. It's just, it's nonsense. So if you see it down here in this corner, it says invalid account or no connection. It's a couple of things. Most times you've inputted your information in, your login information in wrong, or you might not be connected to the internet. Typically, if you log in and it's wrong, it'll say invalid account. All right. When you know everything is right, it'll tell you your account number up here, your broker, and if it's a demo or live. And then when you open up a chart, you hit right underneath file, create new chart. So open up a new chart. It'll bring up the new chart. And you'll be good to go. So now you know you're good to go. If not, it ain't working. All right. Now that you know all that, usually you'll start with 4 charts, delete 3, just bring up 1. We're just going to set up everything. All right. So the first thing we're going to do is set up the dashboard. I'll walk you through the dashboard and then show you how it links to AIRO. All right. First thing first, to set up the dashboard, come to the templates folder. Select blackout. Black the screen out, black the chart out. You don't want to see the chart. Then next, come over here to the navigator, gold folder, gold star. Select that. Come down here, open up expert advisors, double click AIRO dashboard. All right, AIRO dashboard under common. Make sure these four are all check marked. Enable alerts, allow live trading, allow DL imports, allow import of external experts. And remember, if I'm going too fast, you just be taking notes here. Don't try to do it with me, taking these notes, because taking notes and following along with me allows you to retain this, so that if you have to, let's say you log into a different computer or you reboot and everything goes away, you already have the notes and the know-how to do it. Whereas you try to do it with me, you forget steps. So just be taking notes with me. These four here, and then you go under inputs. Now, the cool thing about the dashboard is the dashboard allows you to monitor every time the arrow pops up on any chart you want to follow and any time frame. For me, I don't need that many. I only trade on 4 different time frames, or at least I look at information on 2. I really only trade on 2 time frames. Every now and then I'll take a trade on the other 2, and I don't look at all 28 pairs. So under pairs, you can double click it, get a little drop down. You can set up it to look at your own pair list, so you can create your own list. The 7 major pairs, the top 14, or all 28 currency pairs that are regular currencies. There are some exotic currencies, but those are different. They're not involved, or they're not included in these. And then you can look at all the AUDs, all the CAD pairs, euros, pounds, yens, New Zealand dollars, things like that. I like to do the own pair list because, again, I recommend 10 pairs. 6 are pound pairs, 4 are euros. So I type pound pair, own pair list. Then I come in here and I delete some of these. I don't care about the week 1, the month 1. I only need the H4, the H1, the 15-minute, and the 5-minute. And I delete everything else. You see here, capital M5, comma, no space. Capital M15, comma, no space. Capital H1, comma, no space. Capital H4, no comma at the end. Same as these right here on the time frames. Got to have a capital letter and the number after it. When you go to the next one, there is no space, just separated by a comma. Same thing with the pairs. Once I do that, it's only going to show me these 4 time frames. Next, I come down here to own pairs. I double click on that one, delete that list, and I add in my pairs. You got to add them in the exact way your broker has them listed. And I'll show you where to find it at. For the currency pairs, it doesn't matter. They're all the same. GBP, JPY, all caps, no space, just comma. GBP, USD, comma. GBP, AUD, comma. GBP, NZD, comma. NZD, comma. GBP, CAD, comma. GBP, CHF, comma. EUR, GBP, comma. EUR, JPY, comma. EUR, AUD, comma. EUR, NZD. Those are the 10 pairs. Next, on allow alerts, alerts message and alerts notify, make sure everything's true. So allow alerts, true. Alerts message, true. Alerts notify, true. Template for new chart. Select that. It says default now. Delete that. Type in AIRO, all capital. So template for new chart needs to be all capital, AIRO for arrow. And then ADR number of days right here, turn that to 10. And once you've done all that, select OK. And boom, there it is. Your chart pops up. And you see here, symbols. Go ahead, take a screenshot, a picture of this. This is what it should look like. These are and then also these are the 10 pairs that I recommend you start off trading arrow with. All right. So you see the symbols here? Boom. The spread. We talked about spread earlier. That's the difference between the bid and the ask. If the spread is above 3, it's going to be red. It's recommended that if it's red, you don't enter in for Forex pairs. Non-Forex pairs, you can do something different. Once you add everything on here, you want to make sure 2 things. You want to make sure you select auto trading. All right. Once you select that, you should see a smiley face. It should say arrow dashboard smiley face. If you have auto trading on and it's still a sad face here, click on the sad face, come back to common and check mark allow live trading. You must have allow live trading and auto trading on, and you will get a happy face every time. All right. Once you have a happy face, that means the software is working, because this is an expert advisor that's managing, sending out all the alerts. All right, if you do that, you see that, oh, nothing popped up. That's fine. Just click on the chart here. All right, it popped up. Close that chart. And then boom, everything populates for you. That's a little trick to get everything to populate. All right, so again, these are symbols. That's the spread. Daily open, DLY open. This just tells you from the day open, so from 4 p.m. Central Standard Time, how many pips has price moved up or down. If it's green, you can see here, GJ has moved 50 pips up since the day opened. And the day opened up 6 hours ago. It's already moved 50 pips. So we click on that M15. Well, you can see the day opened up down here. It ran up 50 pips. All right. Weekly open, WLY open, 51. It's the beginning of the week. So on Thursday, this might be 350 pips because prices moved 350 pips since the beginning of the week, which is, Sunday at 4 p.m. Central Standard Time. As you can see here, all the pound pairs are up. So whenever I talk about correlation, you can see that all the pound pairs are correlating to the upside because all of them are up 20 pips or more. So tonight, when it's time to take the Asia breakout session, it's easy to see correlation right now. Price is moving up, so we should be good. But, and this is the easy part to tell you on if prices move 50 pips or not, because you can tell once the money zone starts, you're like, oh, well, GJ is out because it already moved up 50 pips, but the rest of them are good. If right now is a money zone. The money zone, for everyone that wants to know, starts in exactly 1 hour and 47 minutes from now. 1 hour, 47 minutes from now. Right now it's 10:13 Central Standard Time. In 1 hour and 47 minutes, the start of the money zone. All right. Next, the ADR. The ADR stands for average daily range. It's the average number of pips that a currency pair moves on average per day over the last 10 days. So it's looking at the last 2 weeks of data. And you can see that for GJ, GBP, JPY, it's moving 109 pips average per day. So today it's already moved 53. It's almost 50% of the way to its ADR. 54.5 is 50% of 109. So we're almost at 50% move. All right. So which means that if I enter a trade, doesn't matter what type of trade, bounce, arrow, go. If I see that the ADR is over 75% used for the day, I'm not going to enter that trade because the probability of me getting my 20 pips is very low compared to if it's sitting below 50%. Now, what do I mean by 75%? Let's say the ADR is 100 pips. 75% of 100 pips is 75. So you just 75% of the overall ADR, because it's never going to be a round number. Like 100, it's going to be, like you see, 95, 126, 141, 142, 74. All right. Then next you have your time frames that you selected. I got the 4, like we talked about. Underneath one, it tells you how much time until the next candle. So on the M5, I got 15 seconds, 14 seconds now, 13 seconds, 12 seconds. It's going down until the next 5-minute candle pops up. Same thing for the 15-minute, H1, H4, and all of them. All right, so that's pretty cool. Now, here's how it works. Whenever you get a notification, you see it just went away because we just got a new 15-minute candle. So there was a red coloring here on this square. That means that we just had a 15-minute candle. A candle pop up on a 15-minute chart for GU. So I select that. You see 2 candles ago, 1, 2, there's the arrow. It went away because at 15 minutes, the arrow, after it pops up, it's only going to stay there until the next candle. So on the min 5, it'll stay red or green until what? Until the next 5-minute candle pops up. When the next candle pops up, it goes away. Same thing 15 minutes. When the next 15-minute candle pops up, this goes away. Next hour candle pops up, the hour indicator goes away. But as you can see here, boom, it was red. Red means down arrow. If it's green, that means an up arrow has popped up. All right. And so this will send you out a notification. The dashboard, it monitors all these pairs. And whenever a up arrow or down arrow pops up on any time frame that you are watching for these pairs that you're watching, so that you can get a notification from your dashboard. It's like, okay, great. I got a notification. And you can go to GJ 15-minute time frame and see that it pops up. Now, if you click on this and you don't see arrow, that means that on your dashboard, under inputs, where it says template for new chart, you did not type in arrow or you typed it in incorrectly. It's got to match capital A, capital I, capital R, capital O. When you do that, you come here and select this, it'll bring up the GBP JPY minute 15 with the AIRO software. If you want to close it, you just close that. Don't close this one with the dashboard on, otherwise you gotta do it all over again. But you see that when you do close it out, all right, so I have nothing up down here on the bottom of the screen. So if I type that GJ, it brings up a whole new tab for me. So the very first tab, I always put mine on GU. So I know the very first tab is always gonna be GBP USD. You might put it as something that you never trade. Like, all right, I'm gonna use some random stock. That way I know I can close all these other pairs, all these other charts. But if I see that one says Amazon stock, I know not to close that one because that one has my dashboard on it. And that's it. That is the setup process. That's how dashboard works. And that is it. That is it. Let me check the chat real quick. All right. And what about onboarding? This is onboarding call. I'm sorry. This is an onboarding call right here. And then let me take you to the website. All right. So on the website, and forgive me here, when you come to your screen here, you select AP Academy. All right. Where's my AP Academy at? Let's just click on AP Academy. All right. It's going to bring you to this screen right here. All right. This screen right here, AP Academy. And from here on AP Academy, you're going to go through My First Steps and AP Academy. You're going to go through all that. All right, so let's go to My First Steps. So you click on My First Steps, give it a second and go through. Watch the roadmap video. Our CTO, Mr. Bill Wynn, is going to walk you through everything you need to. Watch that quick video to understand what's going on in the back office. Go to, My First Steps. Going to come down here. You got 4 modules to take. Got these 4 modules. Go through all these videos. All right, go through all these videos. They're pretty quick. Nothing too crazy and long. All right, you understand everything. All right. When you're done, you come up here where it says My Products. Select the My Products page. Depending on your product you have, it's going to bring you to this screen here. You scroll down, watch this video. It's a minute long from our president, Mr. Chris Simonian, about products. All right, and you come down here and you see here indicators. There's only one right now. That's just AIRO, and then expert advisors are all down here. Go to the product. Here's AIRO. Select Access Setup Course. You hit the Access Setup Course, and you come down here, and here's all your onboarding. Here's the overview of AIRO. Here's how you set up and access your VPS, everything we just went over. Here's how you set up AIRO, and then all the strategies, 1 through 10. All right, 1 through 10. They're all on here. All right. And that is it. So from an onboarding standpoint, this call is a onboarding call to get you set up. And then you have everything in the back office to help you get set up. Yes, AIRO works with crypto. AIRO works with stock. Anything with a chart, AIRO works on. AIRO works on binary options, stock options, futures, crypto, stocks, forex, currency, forex currencies, index, so indices, precious metals, energies like oil. Anything with a chart, AIRO works on. All right, cool. What should we do if the red green zones appear whilst we're in a trade? If you're in a trade and let's say you're in a buy trade and a red zone pops up, exit the trade immediately. Unless you are more experienced and you know price will eventually go through that zone, the goal is exit immediately. When zones pop up, that is a potential level of what? Support and resistance. So that price is going to do what? Reverse off that level and go backwards. If you're in a sale and a support zone pops up, a green zone, get out of the trade. All right. All right, guys, that's my time. We are 20 minutes over. Stephen, man, thanks for jumping on the call and getting set up. If you have any more questions, make sure to get on the live sessions. We have 11 live trade sessions. Go inside of the AIRO bag chat. So whoever invited you, have them give you the link to the AIRO bag chat. Inside the AIRO bag chat, pinned to the top, there is a note in there that shows you all the time frames for all the live sessions. All right. And that's it, guys. So that is it for the day. We're 20 minutes over. Any more questions? Jump on the live sessions, guys. Watch these videos from the previous Sunday. All your questions will be answered there. Watch the live trade sessions. You know, all that content is right there on YouTube. You can watch it and see us take live trades. You can see us win. You can see us lose. You can see us not take trades. You can see us talk about new stuff that's up and coming. Any other questions you have, make sure you ask it in the AIRO bag chat. I'm always in there answering questions. You can message me directly as well. I am in the AIRO bag chat. You can also jump on the live sessions. All right. So if you guys are going to trade tonight, make sure you trade responsibly. I'll see you guys in the funny paper. Thanks.